This video will cover the solution for problem 1-7B. It can be found on page 45 of your textbook, or you can log into Canvas and then go to the Connect website and access the textbook, the ebook, and go to page 45. So problem 1-7 is going to cover analyzing business transactions and preparing financial statements. So we have Nico launched a new business, Nico's maintenance company, that began operation on June 1st. The following transactions were completed by the company during the first month. We go on to read the instructions, and we have required arrange the following assets, liabilities, and equity titles in a table-like format, and we will have cash, accounts receivable, and equipment, accounts payable, common stock, dividends, revenues, and expenses. So if you download the template file that I've created in Excel, you can use this to follow along with the video, or if you prefer, you can actually go and use a piece of paper, landscape, and write the amounts. Now you'll notice here that my beginning balances are 0, and that should be 0. My beginning balances are 0, and this is 0 because it's a brand new company. If we were an existing company, you want to use the ending balances from the prior period. So we have cash, accounts receivables, equipment, all our assets. Then we have accounts payable, which is a liability. We have our common stock. We have our dividends, which we will be subtracting from our overall retained earnings balance. Our revenues will increase our retained earnings, and our expenses will decrease our retained earnings. So this will be our format, and this is what we'll use. So let's go back. Let's go to each one of the transactions. So our first one is June 1st. We have Nico invested $130,000 cash in the company in exchange for its common stock. So let's go ahead and make it so you can see all the transactions. So our first one is June 1st, and we are going to increase our cash by the $130,000 that's invested. And since we are receiving this cash in the corporation for common stock, we're going to increase our common stock by 130 as well. Oh, too many zeros. F2 to edit. So 130,000 on the left side of the equal sign and 130,000 on the right side. We're in balance. Let's move on to June 2nd. On June 2nd, we have one transaction. The company rented a furnished office and paid $6,000 cash for June's rent. So since we're using the word paid, that means our cash is going down. So we're going to do a negative 6,000. And I want you to be able to see it. So let me go down a little bit more. 6,000. And this will be for our, our rent. So we're going to go to June 2nd. And on the rent column, we're going to put negative 6,000 for the expenses. And again, we're using negative because as our expenses increase, our overall retained earnings decreases. So more expenses causes our equity balance and our retained earnings to be smaller. And we're going to call this rent expense, so we'll know which expense account it pertains to. The next is June 4th. On June 4th, the company purchased $2,400 of equipment on credit. So on credit is another way of saying on account. We're going to go to June 4th, and we're going to increase our equipment by $2,400 for the equipment. And then since it's on account, we are obligated to pay this account balance in the future. So we're going to increase our accounts payable since we owe it to our creditor. And you'll notice we have $2,400 on the left side, $2,400 on the right side of the equal sign. Next entry, June 6th, the company paid $1,150 for cash, $1,150 cash for this month's advertising of the opening of the business. So that means we're going to decrease our cash again by the 1,150. We're going to go ahead and record the expense, 1,150, and this will be advertising expense. Next entry will be on the, oh, I put it in the wrong column. It's supposed to be the 6th, so let's fix that. So June 6th should have been negative 1,150. Let me go ahead and delete that one. And then we're going to do the negative 1150, delete the one above, and fix it. Advertising expense. Next, we go to the next problem, which is June 8th. On June 8th, the transaction will be the company completed maintenance service for a customer and immediately collected $850 cash. So since we collected the money on this date, time the services were rendered, we're going to go ahead and increase our cash balance for $850, and we're going to go ahead and recognize the revenue. So let's go ahead and put positive $850 under revenues, and we're going to call this fees earned. Okay, so let's scroll down some more. So see. So our next entry will be June 14th. The company completed $7,500 cash maintenance service for the city on credit. So this time we're not actually collecting the money from the city. So we can't use the cash account. We're actually going to have to use the AR account. Now, so that I can continue to see this, I'm going to make sure that I freeze my heading. So I'm going to freeze the pane so that when I go down, it'll still. So let's go back to the 14th. For the 14th, we are going to recognize the accounts receivable for the purchase from our customer on credit. So since it is our customer that's putting on credit, we're going to use the accounts receivable since we have the right to receive the funds or the right to collect the funds from the city center. And then we're going to go ahead and recognize the revenue, and that amount is positive 7,500, and we'll call this again fees earned, and we're good for the 14th. Moving right along to the 16th, the company paid $800 cash for an assistant's salary for the first half of the month. We are paying the cash, so we're going to do negative 800, and we're going to do our 800 for our salaries expense, and we needs to be negative, right? And you make sure that you put your proper negatives and positives in there so that you'll balance at the very end. So we're doing we're recording an expense. We want to make sure that our retained earnings and our equity is going to go down for the more expenses that we incur. Next one will be June 20th. On the 20th, the company received $7,500 cash for services completed for the city. So previously we did the work, now we're actually going to get the cash. So we're going to get the cash of 7,500. So we're going to go ahead and you can't see it. So for the 7,500, receive cash of 7,500. So I'm going to highlight that so you guys are able to see this on the screen. 7,500, because we already recognized the revenue previously. This time we're going to decrease the account, negative 7,500, and because we are adding 7,500 to the assets and subtracting 7,500 from the assets, the net effect of these two is 0, and we are still in balance. Moving on to June 21st, the company completed $7,900 of maintenance service. Again, this is on credit, so we're going to increase our accounts receivable, and we'll go ahead and recognize the revenue, and we'll call this fees earned. Going to the 24th, we have the company completed $675 of maintenance services for built-in coop on credit. We're going to go ahead and increase our accounts receivables for the 665, and we'll go ahead and increase our revenues for the 675, and we'll call this fees earned. And then the 25th, the company received $7,900 cash payment from Paula's Beauty Shop for the work completed on June 21st. So here we're receiving some cash, so we're going to go ahead and increase our cash by $7,900, and this time we're going to decrease our accounts receivables by the $7,900, and we're not going to do anything to the revenues because it was previously recognized. It was previously recognized on the 21st. So let's scroll up again so you should be able to see all the accounts. And the next one is the 26th. Company made a payment, so they are making a payment. So on the 26th, we're going to reduce our cash by the $2,400, and this is a payment on our account. So we're going to reduce our accounts, decrease the accounts payable by $2,400. And moving on to the next one, and again, we're not going to record the equipment again because we already recognized it previously. We're only recording the payment, so the cash, the change in cash on our account. Then on the 28th, we paid $800 cash to our assistant for the salaries earned for the second half of the month. So let's go ahead and do minus 800, and then our expenses will also be minus 800, and we'll call this salaries expense. And then our next one will be the 29th. The company paid $44,000 cash in dividends to the owner's sole shareholders. So since there's one shareholder, she's receiving all the dividends. We're going to subtract the $4,000 here, and we'll recognize dividends. Keep in mind, dividends are payouts of earnings. So we do need a positive balance in our retained earnings to be able to pay these dividends. My assumption is that our revenues are going to exceed our expenses. So we're able to pay this $4,000 dividend. So we'll call it dividends. And then we move on to the 30th. The 29th we pay the dividend, and on the 30th we paid $150 cash for this month's telephone bill. So paid, use the word paid. We're going to go ahead and subtract $150 and $150 from our expenses, and we'll call it telephone expense. And we also have another transaction on the 30th, and for this one you'll see we are also paying another bill, and this one's for utilities. So we will subtract $890 from our cash and subtract $890 from our expenses, and we'll call that utilities expense. And we are done recording all of the transactions. Now we do have one problem here. What happened? Something's not, oh, the subtotals are not in there. So let's go ahead and fix that. So our total is $130,060, and you'll notice that my check total for the left side and the right side, they're in balance, and we're good to go part B to begin preparing the financial statements. Any questions, post in Google Hangout.